Good morning. Good morning. My name is Alexander Turro, Senior Market Strategist here at RJO Futures, and welcome to the second edition of Macro Now, where every Monday morning we'll be contextualizing the rates of change of growth and inflation, not only here domestically, but globally as well. So with that said, we'll start with the global currency market. What we're keeping a close eye on here is the US dollar, which for the fifth straight day is signaling a series of higher lows. It was down minus 0.4% last week, and on a three-week basis has moved to bullish. However, on a 90-day trending basis, it still remains bearish. The euro versus the dollar was down minus 0.1% last week and is signaling a transition to bearish on a three-week basis, but still remains bullish on a 90-day trending basis. The yen has appreciated 1.5% last week and remains bullish trend. The British pound has bounced to 0.9% last week and is currently signaling on a three-week basis bearish, but has moved to neutral trend on a 90-day basis. If you look at something like the Russian ruble, it fell minus 3.4% versus the dollar last week, breaking down to bearish trend. You saw in terms of volatility space, the Russian currency moved higher alongside breakouts in the volatility of oil as well as Russian stocks. Despite oil having nearly 9% gain last week and teetering that bull bear line of about, call it 39.50, you'd still want to be trading oil with a bearish tilt. We have now the moving across different asset classes here. We have taken a look at the 10-year yield, which was up 3 basis points last week, coming into the top end of the range, what we dub an accumulation zone of around 70 to 73 basis points. The MOVE index, the volatility component of interest rates, continues to fall, now down today to 37, which is bullish for the price action. If you look at a full cycle investing basis, you have gold up yet again another 0.5% last week versus something like the SPYs or the NQ, but was signaling lower highs alongside the US dollar, signaling higher lows. So we were lowering some of our exposure to gold and looking to buy back in and on pullbacks. If you're looking in terms of the volatility of the NASDAQ, that continues to remain elevated, seemingly can't break down below trend, which for the NASDAQ volatility, VXN is the ticker on that, remains at 32, and you have immediate term risk to 42. And if you continue to break that down, you look at something like Apple's volatility came out to 52 on Friday and now has a complacent implied volatility discount of minus 3% versus a 30-day realized. Risk continues to remain elevated, and then with the dollar right now is the most important factor in terms of global macro and dollar correlation risk. So that's something that we'll be monitoring quite closely here. As always, if you have any questions or would like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening, and you keep your head up out there. Thank you.